Why is there a lid on small caps?
You know, it's a really interesting question. Again, the valuation issues should be benefiting from this tax reform. Maybe, and again, I was talking to a client about this yesterday, maybe it's the fact that people are looking at the global synchronized economic recovery phenomenon. And again, the larger caps tend to have that greater multinational presence and exposure. So it's not just about the domestic tax programs, but also is the rest of the world growing? And you don't quite get that play in small caps.
Nick, we're sitting here talking about equities. I want to talk about FX, your world. The pain trade of 2017 so far, and probably the pain trade cross-asset full stop, with the calls for a stronger dollar that never materialized. Is there any reason to believe those calls for a stronger dollar will materialize next year?
No, I think, we saw weakness in 2017. We saw weakness, I think we'll see weakness in 2018. Our bias would be to sell the dollar on rallies and try to avoid the noise. Now, sometimes there's a lot of noise. We've had a lot of noise towards the end of 2017, rate hikes, this tax reform package or tax cut package, but we would still be selling the dollar on rallies.
What is it that's going to keep the dollar on offer when the 2-year note yield is just grinding higher against pretty much everything else and spreads are wider transatlantic?
Well, a couple of things. Interestingly, we've noticed that, especially when you look at the euro-US dollar rate, they're not really paying attention now to the shorter-term yields. They're focused more on the longer-term yields, 10-year bond and the 10-year Treasury, because of the whole dialing back of the quantitative easing. So that's still supportive at this point. I also believe that a lot of the most favourable news for the US dollar is happening around about now. This latest rate increase that we expect to see today, plus we get the deal signed in terms of this tax package.
Jurrien, the FX dynamics, when you fold that into your equity market view, is that just one more reason to go back to the previous conversation to stay long the big caps here in the United States?
Yeah, this has been, as Thomas said, a global synchronized rally. And I think if you're going to look at any country or any capital for guidance as to where this market's going, don't look at Washington, look at Beijing, because how China handles its sort of post-credit impulse tightening, which they are undergoing right now, that really has been the big driver in previous cycles. And so how China manages this 31% credit impulse that it has used to reflate their economy over the past 2 years is really front and center. And a dollar that doesn't go up is certainly part of that dynamic. And I think the only way the dollar really goes significantly higher here is if the market is just completely wrong about how much Fed tightening there's going to be. The market's pricing in 2.5 more hikes after the one that's presumably coming this week over the next 2 years. And the Fed, of course, is well north of that. So if the Fed's right and the market's wrong, real rates could reset higher and that could push the dollar up. But these, large caps, S&P versus small caps, that really is the global story, which continues to be a pretty good story.